Hi, good morning everyone. I am Amit Kadolkar from Qapita and I welcome you to today's exclusive webinar titled Scaling Equity Administration in India's Listing Boom. Today we have experts. They will share the key strategies and insights that will help you to navigate this exciting IPO growth phase. And we look forward for an engaging session and we expect more questions from your side. So for this exclusive webinar, today we have two experts from Qapita. Suvarna Kulkarni is a chartered account and vice president of customer success at Qapita, where she leads a team of 70 plus professionals focused on onboarding, operation, and customer success. She combines financial expertise with customer first approach to streamline process and drive scalable success in fintech space. Known for her blend of compliance and empathy, Suvarna thrives in guiding teams and clients through a complex challenges with clarity and care. The second speaker is Benaaz. She Benaaz has over 17 years of experience in learning and development, business operations, team management, business development, and project management, with expertise spanning insurance, banking, finance, business administration, and revenue cycle management. Benaaz is a skilled in service delivery, soft skills training, and customer support and operation management. Before I start the webinar, I request everyone to keep the microphone mute to avoid any background disturbance. If you have any questions, you can drop these questions in chat box. If you have more wanted to ask more detail questions in detail, then we'll unmute your mic and then you can directly communicate to our speakers. So let's begin. Over to you, Suvarna and Benas.
Thank you. Thank you, Amit. Good morning, everyone. Hope I'm audible.
Yes.
Yeah. And thank you so much for the warm welcome and introduction, Amit. So basically, here in Qapita, we work very closely with companies on their equity administration, especially during some of the most exciting phases of their journey, the pre-IPO and the listing stages. And that's actually what brought us to today's topic. Over the last few years, India has been going through one of its strongest listing cycles. We are seeing more companies across traditional industries, digital businesses, and even SMEs stepping into the public markets. With this boom, there's also a lot of curiosity, a lot of preparation, and honestly, a lot of questions around equity, ESOPs, compliances, and employee readiness. So today, Benaaz and me, we are going to walk you through what's really happening in the IPO landscape, why ESOPs have become such a critical part of the pre-IPO story, and what companies need to get right to make this whole process smooth. I'll also be sharing some of the patterns we are seeing across the companies we work with, and my colleague Benaaz will jump in later to talk about the on-ground experiences and the overall employee communication that we go for. Going further, we did some analysis and found out that in 2023, we saw around 196 IPOs with around 40 main board IPOs. Just to set the context, in the last one decade, the usual trend of IPOs in India used to be a number that used to be below 100 usually. And that too, the main board IPOs used to be very low. Considering the fact that 2023 started a new style in India where IPOs became a common feature, a common word, we almost hit a $6.4 million value in only IPOs. Overall, India also saw around 327 IPOs in 2024. Actually, this was a record for the country and the highest globally. And some interesting facts and some interesting numbers started coming up. This particular year, the IPOs raised a significant amount of capital, with only NSE reporting over 19.5 billion USD, Around that time's calculation, if we do, it's around 1.67 lakh crore INR. Interesting numbers. Um, then came up 2025, and so far we are witnessing around 93 main board listings. Some names you may have heard: Tata Capital, Grow, Lenskart, HDB Financial Services. These have these have really got the market churning. These numbers are interesting, and that's exactly why understanding how to manage equity during this boom is very important. So, with this background and with all of these companies going public, the question is, how do we fit an ESOPs into this picture of the IPO journey, right? Like I said, a decade ago, ESOPs were more of a niche offering in India. Mainly only a few sectors used to go for it. Today, ESOPs are almost a standard tool for pre-IPO companies to attract and retain talent, showing how the culture around employee equity has matured. So, if a company has a matured equity plan, it kind of gives a different taste to the entire IPO. The investors prefer companies with mature ESOP structures. Most importantly, it improves the governance and keeps and gives you a cleaner cap table. Think about it overall. Wouldn't you want your employees to feel like true stakeholders before the big day? A typical scenario where we deal with clients and we see that during this critical phase of high intense pre-IPO phase, one of the main concerns the HR team faces is to retain the key talent. ESOPs is one tool that can ensure that this talent is retained. Obviously, there are a lot of steps that we have to take to ensure that the employees are aware of what's happening, what is going to happen post listing, what is it that they are going to benefit out of these ESOPs post listing, and what are the steps that the company is going to take pre listing, during listing, and post listing. These kind of ESOP desks build that confidence in the employees as to what's coming up. And obviously, it helps control the attrition. There is also an observation where maybe Benaaz will highlight more in detail later on, where we have seen that there is an increased engagement by employees. Employees feel truly like owners, and they really appreciate these ESOPs during this period. So all in all, ensuring that your employees have a clear visibility of what's in their hand, what's a grant, what's West going to West, how the exercises are going to look like, what happens post listing once they exercise, what will be their overall taxation with respect to these exercises post listing, how does the FMV actually impact their listing, their taxation. All of these details, if the employees have a clear visual representation of it, they have more of a comfort on this entire during this entire phase of pre-IPO, during this DRHP filing, post-IPO. Also, one more interesting fact that we have observed is more exercises occur as IPOs near, because if the employees are aware of what's coming up and know clearly what their shares look like post listing, there is an excitement in the employees, and we have seen more exercises also occur as the IPO start nearing. So, what's the roadmap for these companies that are getting listed? It is important to review the existing ESOP scheme and the ESOP pool size. Companies often adjust the pool to ensure that they have enough equity set aside for future grants, especially as they hire more talent post IPO. We work with companies to fine tune their ESOP pools so they are not scrambling to expand it after they have gone public. There's another important consideration that companies should think about. Should they go with the trust route or the direct route? There are operational and administrative factors that play into this decision. Some companies prefer the trust route for added flexibility, while others keep it direct. There are quite a few points to be considered while we are discussing this decision. This is a typical question we get from our clients too. Further, the roadmap entails various approvals. Obtaining the in principle approval from the stock exchanges is a critical milestone. Getting all the paperwork in order early can prevent like last minute delays. We at Capita do guide companies through each step of the approval process so that by the time they are ready to list, all regulatory boxes are ticked. I have with me Benaaz, who helps us manage our listed as well as unlisted clients, and she has successfully helped quite a few listed clients set their processes and get through the pre and post IPO phases in their ESOP journey. We'll hand it over to Benaaz to share some real world insights.
Thank you, Suvarna. Good morning, everyone. As Suvarna covered, understanding how the journey of scaling equity through the listing boom, I would want to kind of touch upon the recent events and key learnings. So, overall, about we've done about 10 to 15, like a few events with our clients, partnering with them through the journey from an unlisted to a listed, pre-IPO, IPO. We've been partners in terms of how we can lend advisory, consulting help wherever needed in each stage and milestone of the company progressing to what the goal is in terms of an IPO phase. Um, uh, so through these events, we've also kind of understood how the awards for performance and retention are like critical. Certain employees who are part of the company at the nascent stage or in the initial stage, how important they are to through the journey for a company to kind of get fully listed and beyond thereafter. uh, I've just put a few points here. I'll not touch upon them in detail because I'll discuss with you more in terms of the key learning aspects and what is kind of necessary when we're heading through this journey. We Through the events we saw that how founder incentive alignment in turn kind of helps wealth creation and also help with boosting employee morale. A few of the events that we saw through liquidity pre-IPO events that were done, we saw how early structuring of ESOPs, which was led by founders, improved overall alignment between the long term interest and shareholder value creation for the company, as well as these events kind of demonstrated examples, exercises that were done by CXO level signaled strong confidence in the company. It led to a higher level of alignment, where strong alignment with IPO goals were addressed by these founders, by the CXO level, which indirectly created an alignment for the employees, understanding their benefits and believing in the goals that the company had basically put out to set on the journey. We also saw in one of the events, I am definitely not going to name any of my client partners here due to confidentiality, but yes, we also saw an example where around 5.5 crores worth of shares were kind of uh, allotted, covering about 13,000 plus employees and one of the clients that we take care of. And the CFO involvement in early events, where he highlighted tax education sessions and digital dashboards for the employees himself. Handwritten notes, communication by the CXO levels to employees also led to, building employee morale and belief in the overall journey. We also saw in one of the events in the client's journey, for another one where a founder basically went ahead and exercised over crores worth of their options, signaling a strong confidence in the company. On the next one, on the regulatory enablers for scale and global best practices, what we saw through or what we learned through along with our clients is that advanced planning on regulations to ensure smooth execution always helps in terms of compliance. And as Suvarna covered regulatory requirements on certain ESOP scheme ratifications, approvals, once board and shareholder approvals are closed through special regulations, how submission of disclosures, merchant banker, and audit certifications are required to manage the journey from pre-IPO to IPO. We've been there to kind of assist, and this is where we feel there's a lot of information and technicalities that go into drafting each milestone to be achieved. What we've also seen and worked closely is, internal governance alignment on different financial reportings, how technology and systems help meet the goals of the IPO disclosures, the filing, stakeholder awareness, visibility, and investor expectations as well. Um, Moving on to the next slide. Just one second. Yeah, let me just. Moving on to the next slide, I would want, so I'll touch upon a few events again in terms of the uh, learnings that I've included over here, basically. Um, all through the journey, like where a lot of actions and a lot of compliance regulations, a lot of follow up processes are supposed to be executed. We found that digitalization is required not just when you are heading to an IPO journey, but it is also a requirement where in your unlisted to a pre IPO journey. It is important. Now, today, a lot of us feel that, maintaining Excel sheets or spreadsheets and doing it offline can benefit and execute things well. However, when it is a certain population, maybe less than 10 to 12 stakeholders, is where it can kind of prove fruitful. But manual processes break under an IPO pressure. There's when you're actually in the pre-IPO phase and go through events, if there is a digital solution, if there's a technology available at hand for user experience to ensure that everything that is done in terms of the allotment of ESOP shares, etc., is recorded as part of audit ready workflows. Because there are high exercise volumes, there are tight deadlines, there is compliance complexity. So, a platform or any digital solution will enable you to have real time inputs available for you, whether it's related to FMV, whether it is related to user experience, whether it is related to a critical event in the cycle of the scheme or the plan that the company has. So why digitalization matters is also because once you list or once you are beyond the IPO phase, there's a real-time FMV that needs to get updated, where the employee or the participant would want to have information ready at hand to understand the benefits that they can arrive at. So automation of feeds between NSE BSE into the platform directly, which kind of delivers to the end user, is very very critical. It is an important alert to a stakeholder on in terms of where the company is heading, where the value is heading, and it also influences their tax calculation. So basically, if I am able to have all of this information, the pricing, the calculations, the value of options in a digital form in front of the employee on a phone or in on the laptop, instead of having the employee walk up to you to ask questions, etc., each time, or not getting required alerts at each every milestone, because there is no platform or digitalization, it can create a problem. And it helps to avoid surprises during a lot of important critical milestones that we have in the phase of the execution of the scheme that we have kind of delivered. Also, there are it also brings in an administrative ease for all processes and regulations aligned to the journey. So it is also for the company, the administrators, as well as for the participants. So uh, uh, we've seen customers with us right from a startup phase to a pre-IPO to an IPO, and we've seen how a use of technology, use of structured platform, and the benefits of structured processes and communication alerts has helped make this journey easy and also fruitful, and also very insightful and full of awareness for the end user or the participant or the employee of the company. The second key learning that we understood is, and I would want to kind of share a good case study here, structured communication. So there's heightened anxiety for employees. There's like a lot of multi-stage processes that are running, a lot of changes that are happening. Employees are curious. They want to kind of understand what exactly is happening. We also learned, through these events, we worked with our clients on how we can design communication at what stages for designated employees or the insiders and the other employees where there are no restrictions at all. It's a different set of communication. At what milestone at each phase of the event, what has to kind of go out to create that visual guide or awareness or maybe an FAQ that reduces confusion. So basically, whether it is related to the entire journey from pre-IPO to post-IPO, but structured communication in terms of the grant, the changes that we do basically as part of scheme ratification or changes, whatever changes in the vesting, the exercise process, the post-exercise allotment, thorough clarity, and what is the plan that we have in terms of the communication. Because I think when it comes to equity, administration and understanding of benefits, communication is the key. It plays a role in an important role in every area and milestone. So because we want to retain high performers, we want to retain a set of employees, that's why we've kind of allotted this out. And if we are unable to kind of deliver the right communication at the right time, we may see that there's a higher rate of uh, dilution that we may encounter. So basically, how we can structure communications at the right time, at the right stage of an entire journey, helps us tackle employee awareness well, helps us boost employee morale. It helps us keep employees well informed, engaged. Also, based on this communication is where certain compliances related to trading window reminders, payment confirmation, filing, etc., are made aware to the employees for the company. So communication can be done in various ways. So basically, point one ties up with point two. If you have a platform, if you have technology available, we can use simple visual aids or simple notification alerts. We can also have uh, the platform understanding done thoroughly through structured communication for the employees, so they understand the ESOP processes confidently. Over here, one of our biggest one group of company we have in infrastructure, which got listed recently. This So the coverage over here is about. So we did an entire roadshow in partnership with our client. And we covered about the gist of the roadshow was how do we cover ESOP fundamentals? How do we educate the employees? How do we help the employees understand what the platform is all about and what is the scheme or the shares that are allotted to them mean, what benefit it brings in? So um, uh, over here, we noticed that the client, the company itself, had started off with us around early 2017, and we were already communicating, sending out information in terms of required changes, in terms of their important events of compliance to employees. And right since 2017 until now, and even now thereafter, continuously delivering the messages in terms of what has to be done as part of their exercise, their payments, their disclosures, their filing, that is ongoing. But within this, what we did is actually, because it's a big company and the coverage was over 1,000 participants, we tied up with the client and we did a roadshow for across 13 locations, of course, within India. uh, the, uh, we covered 13 locations for these 1,000 plus participants. We had about 22 blended sessions. So when I say blended, means there were 22 sessions that we did, which was a blend of an on-site and of online webinar sort of session that we did for all of the participants. we had about 18 in-person sessions. So we physically traveled to each location. We set up town hall sessions where we educated them on financial literacy of the subject, on the ESOP schemes, on the benefits, and how simplified simple jargons for them for day-to-day examples, like what is ESOP fundamentals. So we had our consulting, our advisory team with us. We also had the customer success team with us who addressed these sessions. 18 in-person sessions we thoroughly kind of enjoyed, because this is more of a, though we went through the formal sessions where we educated them on the ESOP fundamentals, their schemes, how to walk through the platform, exercise their options, what does exercise mean, what does allotment mean, etc. But it was all, even during breaks, there was so much of curiosity amongst employees that the chai time sessions also became like a formal session of discussions where we addressed questions. So it turned out to be really a successful event. There was a lot of applause for this in a way that it was done, and a lot of other clients that we have with us kind of also look at doing similar things where we can help them out. So basically, structured communication goes a long way in terms of, building that confidence within an employee, building that awareness, helping them understand all aspects of the schemes, plans that they are covered in, and why ownership should matter to them for a company. So that's about the case study for one of our big clients. Now moving to, so what we also saw is in the journey of pre-IPO, where liquidity is like a key, where it helps boost employee morale and retention. Why liquidity? Because employees see real value in their ESOPs before an IPO. There's reduced attrition. It motivates them to stay throughout the listing process. One of our clients ran a buyback which was worth over 200 crores. It had a good massive coverage of over 1700 employees before the IPO. And what this event kind of showcased is confidence and rewards within early contributors. Also, aligning stakeholders for IPO success happens through these events. It helps founders and employees feel secure. So it reduces pressure during IPO and aligns everyone towards growth. We also, so within this event, we also saw one of the biggest startups where a founder exercised over crores worth of ESOPs before the filing, ensuring that there's clarity on ownership and incentives. So when founders, CXOs do this during a liquidity stage or a pre-IPO stage, it helps employees gain more benefit. It helps build more confidence within the employees and the ones that are involved in the overall plan. What we also found out is how liquidity showcases a financial strength to investors. It demonstrates governance, cash reserves. It builds investor confidence as well. We have a couple of clients going through the pre-IPO to IPO phase, where we are seeing that there is an expanded ESOP pool, and we are executing buybacks while preparing for the IPO, where there is so robust financial health that is kind of taken into consideration for growth, and when we are partnering up with them to kind of help them through this journey. This liquidity also kind of helps create a positive market perception. It helps you tell stories, make headlines, positions the company as an employee friendly and growth oriented one as well. Uh, so there's one client where we had an event where again uh, over 500 crores worth of coverage was kind of completed. It kind of reinforced its image as a high growth employee centric brand. We So right from setting up processes for them to communicating with employees, doing employee town hall sessions to understand what the ESOP scheme is all about, employee education sessions to understand how you execute your exercise application transactions on the platform. We did this before as well as during the IPO phase for one of the entities that we have. What liquidity also helps do is it helps to reduce IPO pressures as well. I mean, it also helps avoid flood of sell orders immediately after listing, stabilizes stock performance. One of the clients also allowed partial ESOP monetization pre-IPO, which kind of reduces selling pressure post-listing. So these are some of the bits that we learned on the liquidity aspect as to why it is critical or how it can help raise or stabilize the performance and also help with wealth creation for the company to kind of move into the IPO journey. Next is regulatory compliances. So once through the IPO, Suvarna covered how scheme ratifications are required, how regulatory filings are required before you move into the IPO phase. And once you are through it, what is it that you have to kind of take into consideration as part of SEBI's regulations in terms of insider trading to prevent breaches during trading restrictions? Sorry. If I'm speaking too fast, please let me know. I'll slow down. But I hope I'm okay. All good. So regulatory compliances do not only kind of touch upon SEBI regulations, but there are also compliances that employees have to understand basically in terms of what is exercise versus selling. When can exercises be executed? When can the trading windows not be open? When can you sell shares? When you cannot? And what is the timeline of exercises that? So this I'll touch upon when we come to structured processes, but. Um, uh, Regulatory compliances would also kind of cover what is it that you have to kind of file in terms of documentation if you have an exercise application that you want to execute on the system. What are the documentation for exercise good versus what to avoid? So if it is digitalized, like if you have a platform to execute your exercises through, then what are the essential digital documents that you should have? Exercise forms, tax sheets, bank accounts, your demat accounts, because once you exercise and the payment is done and you get the shares approved by the committee, then those are allotted into your demat account. There are regulations where you can't have a joint demat account. If you do have one, it has to be in your name. So regulations in terms of your demat, in terms of the payments, in terms of the exercises that you are allowed to do as part of the plan scheme, rules and regulations is what kind of builds into uh, um, uh, I mean it ties up with the digitalization and technology that if we have is kind of good to execute during an unlisted to an IPO stage as well, and even thereafter at all times, because doing it through spreadsheets, not having enough information to kind of understand what you've been covered for in a plan or what benefit it brings is not a very good user experience as well. So through these events we've seen that how constant communication, use of technology, and how technology also helps you set up regulatory compliances on a platform or on any tool that you may want to use to execute this entire journey definitely helps. So that's about regulatory compliance. In terms of structured processes, basically, so there's exercises within exercises. There's tax, so tax understanding for employees. So in all most of the events, and even for the one roadshow that we massively did as a combination of in-person and virtual sessions, we saw a lot of queries on what is taxation, how is my perquisite value created, what exactly is it that I have to pay as exercise priced, how does it tie up with my salary income. So when we have, so enabling a structured process is one thing, and within that explaining each and every stage to the employee or giving them enough clarity to see for themselves how these calculations are done is another. So when you digitalize it, or when you have a platform, or when you educate an employee to understand how the perquisite tax occurs at the time of exercise. What's the difference between the FMV and the exercise price? How the salary income ties up with the TDS deduction? What is capital gains at large? And clear guidance to employees. So um, we've worked with clients where we've kind of set up systems to help show employees calculations when they exercise on the platform in terms of clearly understanding where tax is. Today we also have the mechanism where payroll systems can kind of combine with exercise or ESOP equity systems to kind of arrive at an end tax deduction or information to the employee. So so tax understanding is something that we had to do thoroughly, right from senior level employees to all covered. In this case study of one of the clients that I mentioned earlier, we had we had shop floor to senior management coverage. So we touched upon this topic on detail. Now in terms of structured exercise process, once you are in the phase of, and once you get listed, uh, what we've seen as a benchmark is that the exercise window is kind of, so for banks we've seen that it's open throughout, with a cutoff date maybe 24th or 25th of around the month. Now, why we need to have a structured process here is because you will have to understand that when employees exercise and make the payment, we can't hold the allotment beyond a month or two. I mean, we've seen that companies earlier used to pick up allotments after 4 months, 5 months, 6 months. This leads to anxiety in employees. This leads to kind of unclear ownership status as well. So backtracking from how frequently you want to kind of allot shares to the company, we need to structure out the exercise process. So we understood with clients what is the processes that they have. We discussed certain benchmarks as part of these structured processes with them. We shared best practices with them in terms of what the length of the exercise period should be. How do you define a payment window? How do you offer an administrative ease to the employees in terms of exercise and payment? So when you have payments, how do we enable different modes of payment, whether it is cash, own funds, enabling key aspects of today's cashless or trust routes that even Suvarna touched upon. Funding is something that we enable for employees, where they gain help in terms of getting the benefit out of the shares that are allocated to them. So, enabling payment modes after exercise, keeping a cutoff for those payment modes or the payments that they have to do, and then proceeding to an allotment and increasing the frequency of allotment or reducing the time between the completion of the exercise event to the allotment or the share allotment cycle. So you wherever we noticed within these clients that we were part of the journey where the allotments were beyond a certain months, it did not go well. So therefore we worked with our clients in a way where we cut short the allotment to twice a month, or maybe by the end of the month, or at the most in the within the same quarter the allotment should kind of close, which kind of helps. And employees gain clarity on the ownership status for themselves. It also helps them with timely filings, and basically for the entire equity administration for the client company and for us, there's more streamlined processes in terms of batching allotments well and in time. So this is something that we worked on, and also kind of shared best practices with a lot of clients going through these events. Employee education again would kind of touch upon the same session that we had. Employee education and awareness not only would mean in terms of what an exercise process is, or what their scheme talks about, or what a vesting is, what grants is, but it also they need to be aware of when they can exercise, when they cannot, how designated employees are allowed to trade, not allowed to trade, what is a blackout window, what is a trading window. So it also, and what is overall taxation, what is the benefit, platform awareness, understanding the entire journey from maybe say if you've been part of the liquidity and the post IPO, how you're exercising, what is the difference between them, what is the difference between exercising and selling of shares. So all of it ties up with employee education, which I think also ties up with structured communication if we when we are in this journey together. So this is what I we've seen in terms of the overall experience with managing the journey from an IPO to an IPO with most of our clients, and we also have a couple ongoing at the moment, and maybe in the future we have another seminar on the webinar on the topic, and we can share more inputs. For now, so this is what I had to talk about. Anything you want to add, Suvarna, to these points? Oh,
Yes, thanks a lot, Benaz. Absolutely. So we have kind of established that communication, digitalization is all important. So let me just put together a checklist which companies can follow and get this process done smoothly. So now let's get into a part where things actually get real for companies. Everyone loves the idea of we are going public, right? Until they actually realize how much work goes into the ESOP side of it. Trust me, this is the part where clients start calling, say at 10 p.m., saying, Suvarna, one small question. And usually that small question turns out to be like a 14-step ESOP cleanup discussion. So if I have to go through a list, a kind of a checklist that maybe companies need to follow, these are some of the pointers we could put together, and this is where we really help our clients through this journey. So let's start with a deep ESOP scheme review. The first thing we tell every company that comes to us is don't assume your ESOP scheme is already IPO ready. It rarely is. Vesting rules, exercise conditions, lock in periods, disclosures, all of this needs to match with SEBI's SBEB regulations. Secondly, it's all about auditing your ESOP pool and most likely expanding it. Almost every IPO company realizes that their pool is too small. So basically, IPO just means hiring plus retention pressures is skyrocketing, right? So check the existing pool, plan top up, get approvals, and just a small tip, doing this before the DRHP is very peaceful. Doing it after the DRHP, let's just say nobody actually enjoys that experience. So it is always advisable that look at your existing ESOP pool, plan for it, top it up. Whatever approvals you need in place for all of this, we can help you. Obviously, we can help you post listing also, but we always we always advise that get your pool corrected, topped up, ensure it's expanded, all of that before your DRHP. So it's more of a peaceful and smooth process for you. The next question we usually get, the trust route versus the direct route, the big decision. This is the part where a company says, we'll decide later. And then later becomes too late. Let me be very honest here. Trust route usually gives flexibility for buying shares and funding exercises and all of that. But there are pros and cons for the trust route as well as the direct route. So this is a decision that we have to take mutually. Uh, this discussion plays a very important role in the overall discussion that takes place when you are getting IPO ready. Then comes the DRHP disclosures also. Previously, also, I spoke about this. This is the place where all the questions come from. This is the big one. The DRHP needs your entire ESOP history. Every grant, every vesting, every exercise, every change. And this is the section where you will get questions from the merchant bankers around like 50 plus questions, follow-up questions, and that's completely normal. So if your history, if your documentation, even your the entire scheme, your entire changes that have happened, if it is properly maintained, Uh, it's usually recommended to have it digitalized, so your history is very clean. These questions seem pretty easy to answer for you when these questions come up to you. The next one is the in principle approval from NSE and BSE. This is kind of like your formal okay from the stock exchanges. Your ESOP scheme will be examined closely. So documents need to be spotless. Once this comes through, the equity admin part becomes much more predictable. Then the employee education. When I spoke largely about educating the employees, they really need to understand what's going to come up. This is hugely underrated. Personally, I believe this is the most important step. Employees will have like thousands of questions before an IPO. Should I exercise now? What's my tax going to look like? What happens after listing? What happens if I exercise now? What happens if I exercise after listing? These sessions are very important. We always recommend that these sessions take place. Employee education plays a very important role because these sessions reduce anxiety and build trust among the employees. Ultimately, they are the stakeholders in this entire journey, right? They're an important stakeholder in this entire journey. Next is planning your exercise windows. Benaaz has already spoken about this. This is where your finance team, your HR, your payroll, your employees, everyone comes together. If this is not planned, this becomes a chaos. A clear exercise timeline makes life easier for everyone. Also, I can't emphasize this further more enough. That is digitalization. Please don't wait. Digitalize everything. Manual ESOP tracking breaks down very fast during an IPO. See, personally, I really love Excels. Excel is a wonderful tool. It's until 15 people start editing the same sheet, right? When you have the finance, the HR, the payroll, everybody working on the same sheet, that's when it's going to start breaking. So ensure that your data is digitalized in some form, right? Digital platforms bring this transparency. They will get you that audit trails and your employees will have clarity. So overall, this is the full checklist we walk companies through. If you do these steps early, not last minute, your IPO journey becomes so much smoother for companies and honestly for your employees too. So to sum it all up, as India's IPO landscape continues to thrive, what we usually recommend is having a structured ESOP plan and a clear roadmap is essential. We have talked about the steps, the importance of employee communication. I believe we have spoken about it multiple times, which is truly very important, and how to navigate the regulatory landscape smoothly. We'd love to hear your questions or experiences. So feel free to ask anything that's on your mind in the chat, and we are here to help you make this journey as smooth as possible. If we have any questions in the chat, we're happy to take them, or you can raise your hand. We can unmute you.
Yes, Shraddha, you can ask question directly to the experts.
Hi, Suvarna. Hi, Benaaz. Thank you for this session. So, Suvarna, majorly this question comes with respect to the exercise process, which gets enabled after the IPO happens, you know. So, one of the clients asked me, like, is there a different, approval we need to seek from SEBI or from, stock exchange for the exercise of ESOPs, or it will be same like a normal trading which we do into the market once IPO happens yeah. So can you just put some light on it?
Yes. So there is a guidance here whereby, as per the regulation, it specifically mentions that you are supposed to intimate the stock exchanges during any
Hmm.
new grants, vesting,
Hmm.
as well as exercises. So
Okay.
if that's where we keep on highlighting the fact that when you're preparing for an IPO, these are some
Hmm.
of the things that you should be aware of. What all you need to do once you are
Okay.
listed. Yeah.
Okay. Thank you.
Thank you. Yeah. Looks like we don't have any further questions. So thank you all for joining us today. Remember, with the right preparation and the right partner, the IPO and the ESOP journey can be successful experience. Thank you. Have a great day.
Have a
Thank
great
you.
day, everyone. Thank you.
Thank you, Suvarna, and thank you, Benaaz, for valuable insights. Thank you.
Thank you. Thank you, Amit. Thank you, everyone.